Hello everyone, welcome to Mastery. It's Rosario's Academy. In this session, we're going to discuss about two adjustments, that is interest on capital and interest on drawings. We're going to discuss how these two adjustments are treated in final accounts. Let us begin with interest on capital. What does it mean by? Capital is owner's fund, isn't it? So, according to the business entity concept, ownership and business organization is separated. Even though the owner has started the business with his fund is treated as an outsiders fund. That's why it is kept on the liability side of the balance sheet. So, since it is treated as an owner's fund, since it is treated as an outsiders fund, interest on capital may be calculated for such fund at the end of the financial year. So, for this purpose, it is getting calculated and adjusted with capital account on final accounts. In the same way, drawings. If the owner has taken some money for his personal use from the business organization, then it is termed as drawings. So, same as interest on capital, calculation of interest on drawings also should be there as per the business entity concept. So, interest on drawings is an indirect income. As far as interest on capital is concerned, it is an indirect expenditure, so it is shown on the debit side of the P&L. Both interest on capital and interest on drawings should be adjusted with the capital account on balance sheet. Let us discuss with an example. Here we go. Let's have an example. Capital is 5 lakh. Okay, capital is 5 lakhs. Then drawings is 50,000. He has taken 50,000 of money from the business for his personal use during the financial year. Then on adjustment, we have been given calculate interest on capital at 2% and interest on drawings at 4%. Okay, that's what the adjustment that we have been given. Okay, so first of all, let us write the adjustment entry. Okay, since interest on capital is an expenditure for us, it should be debited. So, interest on capital account debtor, how much? 5 into 2? 10,000. 10,000 to capital account, because it is calculated on capital and it should be added with the capital. So we have to credit the capital account. So that is 10,000. So first adjustment entry is over for interest on capital. Then when it comes to the drawings is just opposite to capital, because when he is taking the money for his personal use, his capital is getting reduced. So when we are interesting the drawings, it is an indirect income. It's a gain for us. It's an income for us. So the entry should be, since both these two accounts belong to nominal account category, according to the nominal rule, debit all expenses and losses and credit all incomes and gains. So interest on drawing should be credited. So since both these two are calculated in capital, so we have to debit the capital. Capital account debtor, how much? 5 into 4 is 2,000. Capital account debtor to interest on drawings. Interest on drawings 2,000. So the adjustment entry is over. Okay. Now let us get into the final account. How it should be reflected in final accounts. Let us start with the first part, that is P&L. Since both these two elements belong to the nominal account category, interest on capital is an indirect expenditure and interest on drawings is an indirect income. Okay, both these two should be shown in the P&L. Okay, so on P&L, Interest on capital should be shown on the debit side. Interest on capital account. To interest on capital account. How much? Into 4 is 10,000. Okay. And interest on drawing, it's an indirect income for us because he has taken some money for his personal use. For that money, we are calculating some interest and we are reducing from the capital. So here it is a gain. Okay, so that's why it is shown on credit side of the P&L. Start with the keyword by interest on drawings. Interest on drawings. How much? 5 into 4 is 2000. Okay, that is how it should be shown on the profit and loss account. Okay, then when it comes to the balance sheet, how it should be reflected. Okay, so both these two adjustments should be adjusted with the capital, including the drawings. It should be shown on the all these adjustments should be done at the liability side. So make the T form. So separate it. Right side belongs to right side is asset side. Right side is asset side and left side is liability side. The basic structure for capital is, keep in mind, capital account, add interest on capital account, add net profit, then less drawings and interest on drawings from the total sum that we have calculated, then subtract income tax, then the new adjusted capital will be written at the outer column. Again I repeat, capital plus interest on capital plus net profit or less net loss, okay, whatever it may be, then less drawings, less interest on drawings and less income tax, because out of his profit only he is making the tax payment to the income tax authorities, isn't it? So that's why it is getting reduced. So that is what the structure for capital calculation. So here we're gonna adjust these two elements with the capital, including drawings. Let's see how. Okay, capital account. Okay, capital account. How much? It is 5 lakhs. Put it on the inner column. 5 lakhs. Okay, then we have to, obviously interest on capital should be added, because that also should be, because that is calculated with this amount only, because we have received some money as a capital from the owner, we are calculating some interest. So obviously that should be added with capital. So interest on capital. How much? 10,000. So add 5 lakh, 10,000. Then now we have to reduce the drawings. Less drawings. How much? Put it, instead of reducing drawings and interest on drawings one by one, you can write it inner. You can write it both the amount in inner part, and you can add both the things, and you can write it outside, and you can subtract from the 510. Okay, nothing is wrong. Okay, so drawings 50,000, interest on drawings, how much? 2,000. So the total is 52,000. So what we have to do is we have to reduce it from this amount. So the new adjusted capital is 4 lakh 58,000. 4 lakh 58,000 is a new capital. That should be an opening capital for the next financial year, because we have adjusted all these things with the opening capital. Okay, So interest on capital should be added with the capital, and drawings and interest on drawings jointly together subtracted from this value, and the balance value should be written at the outer column of the balance sheet. So that is how we should treat the interest on capital and interest on drawings. Again, I repeat the format once again. Capital, add interest on capital, add net profit or less net loss, then less drawings and interest on drawings. Then if we have income tax, that also reduce it from the value and write it in the write the balance at the outer column of the liability side of the balance sheet. Whatever we have, we can adjust with this. Since here we have these two adjustments along with drawings, we have adjusted this stuff with the capital. I hope you got some basic idea on this. If you have any doubt, please put it on the comment line. I'll explain for you once again. Thank you so much for watching.